Hello everyone, this is Fong here with a real quick tip video to help you manage your direct sales business. I'd like to share with you a crazy simple and free tool to help you manage your inventory and to give you some basics on how to keep good records for tax reporting purposes. Okay guys, I'm going to give you a real brief overview of the basics your accountant is going to need to help you with your tax reporting, specific to inventory. I know this video is a little late for this tax year, but I was inspired to give you this idea and heads up because my husband is in the midst of his busy season. It's tax time and his firm is busily preparing taxes. So I thought this might be helpful to you to work on your records for this coming year. If you are serious about your business, you need an accountant to do your taxes. Not a bookkeeper and not just any accountant. You want a certified public accountant and one that deals specifically with taxes and specifically with taxes for direct sales. I'm not going to go into the wherefores and whys. I'll just say this is one area where you really do need to pay for good service. You are dealing with the IRS. I encourage you to get specialized and highly qualified support, especially if you're making really good money in direct sales. With that said, your accountant is going to need a beginning inventory number from you. That's the amount of inventory you started the year with. And they will need an ending inventory number from you. That's the inventory you have on December 31st. The difference of the beginning inventory and the ending inventory is what you sold, what you used, and what you gave away, and what went out of date. You guys know I am big on simple and low cost, where free is best if possible and only if it makes sense. Sometimes free doesn't make sense. But in this situation, free is perfectly fine as far as counting your inventory is concerned. So here's a super simple free way for you to record your inventory. Now keep in mind, for those of you who gave your company a tax identification number and are paying quarterly estimated retail taxes, then that is a whole different scenario altogether. Chances are you have an accountant you're working with, and if you're doing that, I am guessing you are a pro and you've already got your ducks in a row. So kudos to you, that's awesome. Now if you're not doing that, then don't worry. You can still roll with this way of organizing your paperwork based on my suggestions. Just make sure you have someone qualified to do your taxes come tax time. I cannot stress that enough. Okay, here's what you do. Go into your company's ordering system and act like you're placing an order. Just don't really send it in. Instead, save and print the order and then delete it. Super simple. The computer will do all of the calculations for you of the retail costs, the wholesale costs, and the retail taxes paid if your company is set up that way. Label your mock order beginning inventory 2015. At the end of the year, on December 31st, go back in and count your inventory by saving and printing another mock order based on what you have left. This will now be your ending inventory for 2015 and also serve as your beginning inventory for 2016. What? It's that simple? Yep. Now go ahead and use the same process to list and print what you've used as display or demonstration products, along with what you've given away for the year and what you had to dispose of that went out of date. Make sure you attach individual receipts with names and dates to the master list of what you gave away, and you're good to go. As far as the totals are concerned, your accountant normally only cares about total numbers. For example, if you sell cosmetics, all you need is the total number of lipsticks you had on hand, not how many of each shade. Just the total as long as the price is the same. Hope that makes sense. Your accountant is going to love you when you can give them one printout of beginning inventory, one printout of what you gave away, one printout of what you use as displays and demonstrators, and one printout of what your ending inventory is. Your sales will need to be shown in your sales receipts or any internal reporting system that you have. For example, my company has a way for me to keep records of my customers along with what they purchased for the year. So I use those sales receipts as support documents for my sales total. Super simple. There's so many wonderful software systems out there. But if you're working on a budget, there's no need to purchase or pay for fancy inventory control systems, especially if you're just starting out. You want to keep all of your profit as profit, right? So you can give yourself the encouragement to go on to the next year. And as you do better and you make more, then you can always look into making purchases if necessary. Your company already has a tool you can use. It's your internal ordering system. This one simple tool could help you save time and money to help you remedy the droopy roots issue that I talk about in the video about why people fail at direct sales. What's your simple tip for inventory counting? Let everyone know what you're doing in the comments below. You know, the saying is a little corny, but it's so true. Sharing really is caring. I hope this was helpful to you. If it was, please like, share, and subscribe. Thanks for stopping by.